beginning of a very classic late big cycle debt crisis when...
As of January 30th, 2024, the US national debt has soared to an astonishing $34 trillion, an unimaginable figure that casts a long looming shadow over our nation's future.
The supply-demand gap, when you're producing too much debt, and you have also a shortage of buyers. What's happening now as we have to sell all this debt is we then do have enough buyers. There are changes now in terms of the quantities in the world that are being held by large investors around the world that have lost money in these treasury bonds and so on. And then there are geopolitical changes which are having an effect. Some cases, some countries are worried about sanctions, and then there's this geopolitical shift. So when I look at the supply-demand issue, there's a supply-demand issue for that debt. There's a lot of debt. It has to be bought, has to have a high enough interest rate. So a crisis, that's, if we continue down this path in terms of what's likely over the next, 5 and 10 years, then you reach the point that balancing act becomes very difficult.
How will we know? And is it really a function of not having enough buyers for the federal debt? Is there any evidence of that so far?
We're right at the brink of starting to find out that. The amount of selling of government debt collapsed, right? We didn't issue government debt. And now we're going to issue a lot of government debt. And so when we look at the buyers, there appears to be a significant shortage of the buyers for that government debt. But we're now at the brink of being able to see what that supply-demand picture looks like as we go over the next year and two.
The US national debt, a problem that started in the 80s, has now ballooned to a whopping $34 trillion, casting a dark shadow on our nation's future. This isn't just a number, it's a harbinger of a potential financial crisis that could shake the very foundations of our economy. The roots of this colossal problem trace back to the 80s. Debt, a constant companion of the United States, started to grow at an alarming rate. It's a story interwoven into the tapestry of our nation's history. The question arises, why should we worry now? Haven't we overcome numerous trials before? Yes, indeed we have, but this time it's different. This time, we're dealing with the ominous concept of death spirals. These financial whirlwinds have caused the fall of many prosperous empires in the past, and the United States might be heading towards the same precipice. It might sound exaggerated, but the warning signs are clear. As our debt continues to grow exponentially, we are speeding towards a point of no return. Consider this. The United States currently shells out $169 billion per year just on interest expenses. That's a staggering 16% of our annual budget. Fast forward 4 years, and we're looking at a scenario where the government will likely spend twice as much on interest as it does on our entire military. This is not a stable path. It's a treacherous road that threatens the stability of our entire financial system. With death spirals looming in the horizon, and interest expenses threatening to outstrip even military spending, the risk to our financial system is all too real. The time to act is now. To ignore these signs would be to gamble with our future, and that is a risk we simply cannot afford.
Given the challenges that we face, fiscal challenges that you describe, we need a political process that will help us get out of it. Do we have that? It goes to the second issue that you always deal with, which is internal conflict.
Well, the things that you see happen over and over again when you look at history is when you have a financial not good situation. At the same time as you have large wealth gaps, you start to see the emergence of populism, and we see extremism in both of the political parties. Okay, we see that split. A populist is an individual or a leader or a political person who will win at all cost, that the rules of the game don't as much matter. And so we're in the January 6th type of incident and so on is very interesting. The political system in terms of primaries and the parties tends to create that sort of polarity. I think that I think it's very clear that there is only one good outcome, if we can. And that's a strong bipartisan middle, because either of the extremes is not going to be able to be dominant. The small right, or even the small left. And as a result, we're seeing a fragmentation. Geographically, you're seeing people move to different areas, not just because of taxes, but of differences in values and so on. And so you're seeing this separation. I think over the next 2 years, the real question is, can we have a strong bipartisan middle, or are we going to have that kind of fragmentation? We have three things aligning that are concerning. On this short-term debt cycle, I call it, the 7-year cycle, we're about halfway through. In other words, interest rates are now at a level that they're probably going to stay at, but they're probably not going to rise much from here, and there's tightness. And the consequences of that are going to be a weaker economy going forward. It doesn't have to be a big downturn because of the household sector, but it is a balance sheet kind of recession. And I think things are going to get worse in the economy. There's a financial issue at the same time as you have this internal conflict. So I think that's going to make for a risky situation.
You've just heard Dalio break down the concept of the government selling its debt. In simple terms, when the government needs funds for projects or programs, it turns to financial markets and borrows money by selling treasury securities. These securities promise to repay a certain amount with interest over time. There are different types: bills, notes and bonds, each with varying maturity dates. Individuals, financial institutions and foreign governments buy these securities, essentially lending money to the government. The big issue is the diminishing demand for US debt instruments. Less demand means fewer lenders, potentially leading to challenges. The government might have to offer higher interest rates to attract lenders and face difficulties raising the necessary funds. Let's connect the dots. As the federal deficit grows, the government issues more debt instruments. Since we have low demand, therefore government will increase interest rates on these securities. With a substantial amount already allocated for interest expenses, any further increase poses a serious threat to economic stability. Rising interest rates almost always have a ripple effect, influencing rates across the board. If this situation continues, it can lead to a catastrophic recession. With death spirals looming in the horizon, and interest expenses threatening to outstrip even military spending, the risk to our financial system is all too real. The time to act is now. To ignore these signs would be to gamble with our future, and that is a risk we simply cannot afford.